Good morning, everyone, and welcome to the market opening bell for Monday, May 4th, your 10-minute guide to the stock market. Hong Kong stocks softened after the index futures settlement. The Hang Seng Index opened 103 points lower last Thursday and remained weak throughout the session. It broke below the 26,000 level, falling as much as 377 points to an intraday low of 25,734 before closing down 335 points or 1.3% at 25,776. The H-share index fell 123 points or 1.4% to close at 8,681. The Hang Seng Tech Index dropped 38 points or 0.8% to finish at 4,871. Total market turnover amounted to 291.5 billion Hong Kong dollars. Southbound stock connect funds recorded a net inflow of $12.192 billion into Hong Kong stocks. Major net purchases included SMIC 1.493 billion, PetroChina 1.168 billion, Xiaomi 1.108 billion, SMIC 703 million, Meituan 597 million, Hua Hong Semiconductor 556 million, Cambridge Technology 285 million, Yangtze Optical Fiber and Cable 109 million, and PopMart 101 million. Net sales were led by Tencent 1.069 billion and Alibaba 188 million. According to statistics, Southbound funds have bought SMIC on a net basis for 15 consecutive trading days, totaling $7.021 billion. They have sold Alibaba net for 8 straight days at totaling $4.773 billion, and Tencent for 5 consecutive days, totaling $3.72 billion. For the week, the Hang Seng Index fell 202 points or 0.8%. The H-share Index declined 1.1% and the Tech Index slipped 0.6%. All three major indexes recorded a second straight weekly loss. However, for April as a whole, the Hang Seng Index rose nearly 4%. The H-share Index gained 3.7% and the Tech Index climbed 4.8%. Last week, the Hang Seng Index traded in a narrow range around the 26,000 level, forming a consolidation pattern where the 10-day, 20-day, 50-day and 100-day moving averages converged, a setup that often precedes a directional move. Hong Kong ADR trading suggests the index will open 483 points higher today at around 26,260. Whether it can stabilize above 26,100 will be the key near-term focus. On the mainland, the three major A-share indexes traded mixed with narrow ranges last Thursday. The Shanghai Composite closed at 4,112, up 4 points or 0.1%. The Shenzhen Component Index ended at 15,107, down 13 points or 0.09%. The Chinex Index fell 10 points or 0.3% to 3,677. Combined Shanghai and Shenzhen turnover reached 2.74 trillion yuan. Looking back at April, all major A-share indexes closed higher. The market showed an overall oscillating upward trend, with the Shanghai Composite reclaiming the 4,100 level and rising 5.7% for the months. The Shenzhen Component Index performed even stronger, surging 12.1%, while the Chinex Index jumped over 15%, its best single month performance in nearly 7 months. The Shanghai and Shenzhen markets are currently closed for the Labor Day holiday and will resume trading on Wednesday, May 6. The renminbi central parity rate against the US dollar was lowered by 20 pips to 6.8628. China's National Bureau of Statistics released the April Purchasing Managers Index PMI, showing a divergence between strong manufacturing and weak non-manufacturing activity. Although manufacturing remained in expansion territory, non-manufacturing unexpectedly slipped into contraction, indicating that domestic demand recovery momentum is still fragile. The manufacturing PMI came in at 50.3, 0.1 percentage point lower than the previous months, but above the market expectation of 50.1. The production index rose slightly to 51.5. New orders stood at 50.6, and the employment index edged up to 48.8. The non-manufacturing business activity index fell to 49.4, and the composite PMI output input index declined to 50.1. Mainland new energy vehicle makers have been releasing their April delivery and sales figures. BYD sold 321,000 vehicles in April, down 15.5% year-on-year, but up 7% month-on-month. Overseas sales hit the record 135,000 units, up 70.9% year-on-year. From January to April 2026, BYD's cumulative overseas sales reached 454,293 units, still some distance from its full-year target of 1.5 million. Geely Auto sold under 35,000 electric vehicles in April, up 8%. New energy vehicles in April, up 8% year-on-year and 6.5% month-on-month. Great Wall Motor sold 106,312 vehicles in total, up 6.25% year-on-year, with NEV sales at 26,898 units, up 23.1% month-on-month. Chery reported total sales of 236,400 vehicles across its 5 brands, up about 27% year-on-year, with new energy vehicles sales at 90,519 units, up 44.7% month-on-month. Leapmotor delivered 71,387 vehicles, up 73.9% year-on-year and 42.7% month-on-month, a new monthly record. Its A10 model received over 40,000 firm orders in its first month. Li Auto delivered 34,085 vehicles, up 0.4% month-on-month, but down 17% year-on-year. Xpeng delivered 31,011 vehicles, up 13% month-on-month, but down 11.5% year-on-year. Xiaomi Auto delivered over 30,000 vehicles in April. NIO delivered 29,356 vehicles, up 23% year-on-year, but down 17.3% month-on-month. Notably, Tesla's late April price cuts prompted Li Auto, Xpeng and others to follow suit. This price war further squeezed automakers' profit margins in April. In addition, the industry-wide 7-year ultra-low interest loans program ended on April 30, and its impact on sales remains to be seen. However, the Ministry of Commerce trade-in subsidy for vehicles up to 10,000 yuan officially took effect in May and is expected to provide some support to the market. Macau's Gaming Inspection and Coordination Bureau reported that April's gross gaming revenue reached 19.894 billion pesos, up 5.5% year-on-year, below the expected 6.5%, but down about 12% from March's 22.612 billion pesos. The monthly decline was mainly due to April being a traditional low season without major holidays, with the Labor Day, Golden Week and various large-scale events underway. Analysts expect May's gross gaming revenue to rebound to around 23 billion pesos, representing over 15% month-on-month growth. Year-to-date, gross gaming revenue stands at 85.767 billion pesos, up 12.1% year-on-year, on track to meet or approach the government's full-year target of 236 billion pesos. Standard Chartered announced record first-quarter pre-tax profit of $2.45 billion, up 16.5% year-on-year, and beating market expectations, driven by strong wealth management growth. Operating income rose 9.72% to a quarterly record of $5.902 billion. Net interest income edged up 1% to $2.9 billion, while non-interest income surged 16% to $3 billion. The net interest margin was 2.05%. Operating expenses rose only 1%, achieving a positive jaws ratio of 8%. The CET1 capital ratio stood at 13.4%. The bank maintained its full-year guidance. AIA released its first quarter 2026 performance summary, which beat expectations, driven by strong growth in mainland China and Hong Kong. New business value rose 13% to 1.757 billion on a constant exchange rate basis, 22% growth excluding the high base in Thailand. Annualized new premiums increased 16% to $3.152 billion, with an new business value margin of 56%. Mainland China new business value grew 26%. Hong Kong new business value rose 21%, while Thailand new business value fell 18% due to an exceptionally high prior year base. The company launched a new $1.7 billion share buyback program. FWD Group reported first quarter new business results, while Hong Kong and Macau mainland growth, overall sales growth slowed compared with the high base last year. Annualized new premiums rose 4% to $720 million, led by expansion in Japan and Southeast Asia. New business contractual service margin reached $556 million, up 18% year-on-year. On Wall Street, the three major U.S. indexes rose on Thursday. The Dow surged as much as 891 points, or 1.8%, closed up 790 points, or 1.6%, at 49,652. The Nasdaq gained 219 points, or 0.9%, to a record 24,892, and the S&P 500 rose 73 points, or 1%, to 7,209, closing above 27,200 for the first time. On Friday, U.S. stocks moved individually. Tech and communication services led gains, pushing the Nasdaq to a new high of 25,114, up 0.9%, and the S&P 500 to 7,230, up 0.3%. The Dow fell 0.3% to 49,499. The Nasdaq China Golden Track Index slipped 0.6% to 6,887. For the week, the Nasdaq rose 1.1%, the S&P 500 gained 0.9%, both marking a fifth straight weekly gain, and the Dow advanced 0.6%. Reports indicate that under tightened crackdowns on chip smuggling, NVIDIA's Blackwell B300 chips are now trading at nearly double the price in China, reaching around 7 million yuan. As NVIDIA's most advanced and powerful chip, the B300 price has been climbing since the start of the year due to strong computing demand from Chinese tech companies. Apple reported second quarter results that beat expectations on both revenue and earnings, driven by stronger than expected iPhone sales. Earnings per share rose to $2.01 from $1.65 a year ago, beating estimates of $1.95. Net sales increased 17% to $111.18 billion. iPhone revenue reached $56.99 billion. The company also issued third quarter guidance well above market expectations. Apple shares rose 3.2% on Friday. Other tech names performed well, with Oracle up 6.5%, Salesforce up 4.1%, and gains also seen in Intel, Microsoft, and Amazon. ExxonMobil and Chevron both reported year-on-year declines in first quarter profits due to Middle East supply disruptions, though results still beat expectations. The shares fell 1% and 1.4% respectively. U.S. economic data show initial jobless claims for the week ending April 25th at 189,000, below expectations. First quarter GDP grew at a 2% annualized rate, below the expected 2.3%. March PCE inflation rose 3.5% year-on-year and 0.7% month-on-month, in line with forecast. The ISM Manufacturing Index was 52.7, and the final S&P Global U.S. Manufacturing PMI stood at 54.5. 7 major OPEC Plus producers announced they will increase crude oil output by 188,000 barrels per day from June as part of their collective commitment to market stability. This is OPEC Plus' first decision since the UAE formally exited the group earlier this month. However, with disruption in the Strait of Hormuz, actual implementation remains uncertain. Our stock pick today is Dongyue Group, stock code 189. Dongyue Group is primarily engaged in the manufacture, distribution, and sale of high-performance polymers, silicone, materials, refrigerants, dichloromethane, caustic soda, and other products. The group's core refrigerant product, R22, is an important refrigerant and serves as the main raw material for the production of fluorinated polymers such as PTFE, HFP, and other downstream fluorinated chemicals, as well as R125, and R32 are the main components of other types of green refrigerants, such as R410A, used to replace R22. At present, R410A has become a major replacement refrigerant and is widely used in inverter air conditioners and other green household appliances. R134A is widely used in automotive air conditioning and refrigeration systems, while R152A is another major refrigerant product of the group and can also be used as a foaming agent, aerosol propellant, and cleaning agent. In addition to being used as a refrigerant, temperature control medium, and aviation propellant intermediate, R142B can also serve as the main raw material for the production of VDF. In the traditional refrigerant sector, the implementation of quota management in China has improved the industry's competitive landscape. Prices of refrigerants such as R32 and R134A have rebounded, driving a recovery in profitability. For the year ended 31st December 2025, the group's refrigerant segment recorded external sales of 4.94 billion yuan, representing a substantial year-on-year increase of 52.13%. This accounted for 34.42% of the group's total external sales. The segment achieved a profit of 2.287 billion yuan, representing a year-on-year growth of 183.71%. The group's non-wholly owned subsidiary, Shandong Dongyue Organosilicon Materials, which is listed on the China Export of the Shenzhen Stock Exchange, recently issued a profit alert. It expects net profit attributable to shareholders for the quarter ended 31st March 2026 to be between 183 million yuan and 203 million yuan, representing a year-on-year increase of 397.02% to 451.34%. After deducting non-recurring gains and losses, net profit is expected to be between 205 million and 225 million yuan, up 424.02% to 475.14% year-on-year. The energy center project that the group started constructing in 2025 is progressing steadily and is scheduled to commence production in the first half of 2026. The project surpasses the group's existing power plant in terms of technological level, energy efficiency, consumption reduction, and environmental performance. Once completed, it will effectively enhance cost control capabilities. Recommended buy-in price $12.6, target price $14, stop loss $11.9. I do not hold the above stock.